Good afternoon or for you West Coasters and good evening for those of you in the central and eastern parts of the continent. Today we are talking about forcing appreciation, increasing the value of multifamily assets to maximize your return on investment. As you know, professional real estate investors focus on things that they can change in a property and not just wait for the market to appreciate, which we all know happens at some point in time. But adopting a value-add strategy and really forcing that appreciation from day one is how the most successful real estate investors really put an oomph on their returns and do a happy dance once they collect the paychecks. So that's what we're talking about today, and we will be dividing them into physical and operational camps just because there are unique traits to both sides of how you can play it. And not saying that this is a be-all, end-all list, but I'll be covering the most common ways that real estate investors in the multifamily space are really increasing that ROI, return on investment, using a value-add forced appreciation strategy. And why is this all important? Well, it all comes down to valuation. And if you've been watching the past videos, we talked about how these larger commercial deals are valued using the income approach. So I'll just give you a quick example of why forcing appreciation is so important, especially for a syndicator or just an investor who owns a multifamily property. So let's say we have a 200-unit property, and we're able to increase the rent $50 a month on each of the 200 units. So that gives us $120,000 a year. And how do we estimate to what's the best method of estimating the impact in the market value of those rent increases? Because we know the income approach to valuation, which is used in valuing large multifamily properties, it rewards net operating income, it rewards cash flow because investors are willing to pay a multiple to receive that annual cash flow and earnings from the property. So $120,000 a month increase. So let's say it's a market cap rate of 5%. If you're not familiar with the cap rate, just head over to callseth.com and we can explain it, or you can watch a previous video that I did on the income approach. But $120,000 a year in rent. So what we're going to do is we're going to divide that by the market cap rate of 5%. And that's going to give us an increased value of $2.4 million. And this is where the scale of multifamily real estate really comes into play. If I own a duplex and I increase the rent $50 and I get an extra $100 a month, that's going to make minimal impact, especially with the smaller properties. We're using the comparable approach, so we can't really force the value based on the NOI. But with these large multifamily properties, $120,000 increase in rent because we have the scale of 200 units divided by a cap rate of 5%, that's $2.4 million, all just for raising the rent. So this really shows us the power of commercial real estate and how scale is really our friend. So let's talk about the ways we can force appreciation and increase the value and make some money in real estate. So we'll have physical. Let's get physical, and then we'll have operational. I should have that playing in the background. All right, so what are some ways that we can really push those rents, increase the value? Well, we just talked about, I gave you the example of increasing the rents, and sometimes that's all it takes, is you buy a property where the rents are below market value of $100, $150 dollars a month, just because that landlord, maybe they've owned it for 20, 25 years, they haven't kept it up, they haven't really pushed the rents to where they should be. So you have an opportunity as an operator, as an investor, to come in and just say, hey, Mr. and Mrs. Tenant, this is what the market is bearing right now. You're not going to gouge anybody, but tenants are the first people to know when they're getting a deal on rents, because trust me, they know what every other property is charging for rent. And as long as you're raising the rents to market value, you're not going to lose very many people, because they know that if they move to somewhere else, they'll be paying market rent too. So the tenants, and keep this in mind, the tenants know rents better than anybody else in the business. So just raising the rents is a great strategy, and it's the most cost-effective strategy. It doesn't cost you any more to bring those rents to market value. And this is a great place to start if you're looking at ways to increase the value of your property. And then we're going to talk some physical ways. So renovations would be one. And there's lots of different types of renos you can do. So one of the most common ways is you have your floorings, kitchens, and bathrooms. So we'll say kitchens and then bath. And anybody who's familiar with real estate will know kitchens and bathrooms really sell a product. So lots of times now we're going in and seeing these properties, maybe they'll have an early 90s dated kitchen, sometimes earlier, but right now we're dealing with 90s product, and you can tell a difference between a 90s kitchen and what's the standard today. So you have a white kitchen cabinet, some granite depending on the market, nice backsplash, stainless steel appliances, and this makes a really big difference, and tenants are willing to pay a premium to live in a place that looks like it just came out of a magazine. I'm not saying you're going overboard on those expenses, but there is a difference, and I'm sure if you've walked through a couple different places, you can really feel the difference when you're in the unit between a freshly renovated, modern-looking place and something from 20 years ago. So doing these renos makes a big impact, especially replacing the flooring. If the hardwood's there, you can refinish the hardwood. That's very cost effective. But you can also put in a nice PVC type of product that's really, really durable. And there's some really nice colors that you can do. The gray palette's really in right now. So kitchen, bathroom, flooring, those types of renovations. And you can command a premium in rent if you have freshly renovated units. And then you can add amenities. Amenities. And this is where you can go really crazy, and the sky's the limit for amenities, because there are so many creative ways that you can add value to a property depending on where the property is, the tenant profile, the market segment you're going for. So what are some amenities? Well, we can do laundry, en-suite or in-suite laundry. So let's say 5 of your competitors have en-suite washers and dryers in the units. Well, if the place you're acquiring doesn't have that, then if you can add those hookups, you can get a premium, especially if you're leasing the laundry equipment. Your ROI on that money really goes through the roof there. So adding laundry, what else can we do? We can add laundry, we can add a gym. If there's no gym, sometimes we've seen people take storage areas, storage units that were being ill-used and turning them into a gym. Especially the younger crowd really likes having the gym and doing some lifting every now and again so they can be in tip-top shape. Barbecue pit. And this is one of my favorites. I love to barbecue. I love the steak searing station on the side of a Napoleon grill. I like smoking ribs, all of that stuff. So I'm always a big fan of adding a barbecue into properties. And you add the pergola out there. It gives a nice meeting space for tenants. If they have family come over, they can have a little function outside, do some burgers, hot dogs, maybe some veggie burgers now for those of you inclined. We won't even get into that. But the tenants can have a barbecue and really enjoy themselves outside. So that's one way. And another way too is, let's say you have a tennis court, but the tenant profile over the past 30 years has really changed. Maybe it was a different type of tenant there 30 years ago where they would really use the tennis court a lot, but now you have lots of young families and nobody really plays tennis. You see this quite a bit where you'll have this gorgeous tennis court that's not being used at all. You can turn that into a soccer field. You can turn that into a playground. So we'll say playground, play area, soccer. And the great thing about a soccer field is you just have to mow the grass and then it's it. And that's it. You add the 2 nets on the side. Same with the playground. You plop it in, depending on how many kids you're expecting. Those things last for quite a while. And then you can add storage facilities. So sometimes there are areas of the property that aren't being used. Add some storage units there and charge a premium for those. These are all really great amenities that, and like I said, the sky is the limit. You can really increase value using your creativity, and you will be rewarded for that additional income you're bringing to the property, increasing the NOI. So what are some operational ways that we can add value in a multifamily property? Well, number one would be reduce expenses. Just like it was a go-to play to increase rents, well, the go-to play is decrease expenses, and there's lots of creative ways you can do that. So one way would be utilities. Maybe right now the owner, the landlord, is absorbing all of the utility costs, and as you know, some people like to run up the water if they're not paying for it. So putting that back on the tenants, making the tenants responsible for the usage, whether you're doing a RUBS program or something else, bill back the utilities to the tenants, and that removes it from your expenses, and your property is going to be a lot more consistent that way. You can also even put in eco-friendly toilets, eco-friendly shower heads if you don't want to bill back to the tenants, and that will have significant savings in terms of water and even light fixtures and light bulbs. All of this stuff over a big scale. So let's say you have a 300 unit property, that's a lot of light bulbs. So if you can change them over to an energy saving model, that's going to make a big impact on your energy savings. What else can you do? Oh, you can decrease the turnover period. So depending on the market you're in, let's say your typical turn, so you're going in, you're doing these renovations as part of your value add play, maybe that's taking a month and a half. If you can manage that better, so this is where the operational side comes in, if you can manage that process better, putting better processes into that unit turnover, if you can get that unit back online in half the time, you're going to have a tenant in there a lot sooner, and that's more rent being paid. So that's going to make a big impact. Also, let's talk about leads. So on a daily basis, your property manager, your on-site leasing specialist is going to be getting inquiries. Well, maybe the current person working at the property is not trained in how to properly convert leads and get them into a unit faster. Well, maybe you can come in, you've got the background, you've got the processes and experience. Maybe you can add additional training and make sure the staff on site is qualifying leads properly, asking the right questions, getting commitments, so that way your units are offline for less time. So maybe it's taking 4 weeks to have a property fully leased. Well, maybe with proper training, you can get somebody in 2 weeks. Again, 2 weeks might not sound like a big difference for one unit, but you go over it, let's say you have a 50% turnover in a year, that's 150 units out of a 300 unit property, and those weeks add up quite a bit. So it's about having those small wins, and those small wins will snowball into a larger win, which obviously is that increase in value. What else can we got turnover, we got lead conversion, tenant renewals. This is often overlooked. Well, I would say the renos, having new kitchens, bathrooms, all that stuff, that's a lot sexier to talk about, and obviously it looks better. But renewals, so what happens? A tenant moves out, then we have to advertise to get a new tenant in, we have to show the property, that takes man hours, and then we have to, the unit's vacant, then we have to sign them to a contract, then the tenant moves in, then they start paying rent. Well, what happens if we could reduce the amount of people moving out? A lot of times it's just a matter of having the landlord property manager speak with the tenants, ask them what they would like. Sometimes, we've had lots of investors where they'll go in, lots of operators, they'll go in and say, hey, listen, if you're willing to renew for another year, I'll replace the flooring in your unit, which you were going to do anyway. This is a big secret. Or maybe it's granite countertops. Approach the tenant, hey, if you're willing to renew for another year, I'll come in and put a new countertop. Well, you were going to do that anyway then when they moved out, so might as well do the work while they're still paying your rent, and you're going to be a lot better off in having that stream of income continue. So these are all operational ways that you can increase the value of your property. And you don't have to use all of these. Some properties it's just going to be strictly renovations. Other properties is going to be adding laundry and reducing expenses by doing a RUB program with the utilities. Others is just going to be purely operational. We've seen properties where it's just the management is doing a poor job. They're the wrong management company for that asset. They specialize in another niche, and it's just a matter of changing over the guard and getting new people in there who specialize in that area or in that property, and then the property chugs along just fine after that. So if you have any questions about this, head on over to callseth.com and we can have a quick chat, especially if you're interested in investing in real estate and you think this real estate investing thing sounds pretty good, because it is. Lots of tax benefits and lots of cash flow and appreciation, especially if you're forcing it using these strategies. So hope you learned something. Thanks a lot for watching, and we'll talk to you tomorrow.